European Central Bank announced a €750 billion quantitative easing program and is now in talks with Eurogroup finance ministers to try and find a coordinated solution. There are fears, however, of a deep recession in the eurozone, with the aviation, tourism and even leisure sectors all particularly hard hit. Hough has more from Brussels.
The European Central Bank was initially criticised for a weak response to the COVID-19 pandemic. It was accused of being too hesitant in the early stages and being behind the curve, underestimating the damage the virus would do to both the eurozone and the wider global economy. But in the third week of March, there was a change of tack, a bit of a U-turn, and the ECB announced a massive asset-buying programme worth some €750 billion, almost an unprecedented figure. The ECB said it would be buying up government and corporate bonds to calm debt markets, particularly in hard-hit countries by COVID-19, such as Italy and Greece. The ECB is now involved in talks with the EU Council and Commission, as well as finance ministers from the Eurogroup, about what further a coordinated economic action is needed. But there are divisions within the bloc. Italy and Spain want a common debt instrument that's become known as a corona bond to raise funds, but that's being opposed by frugal countries in the north of Europe, such as Germany and the Netherlands. Finance ministers now have until the end of next week to try and find a solution amid fears of a deep and long-lasting recession in the eurozone. Hough, SABC News.